Because now we can actually start to get an idea of the what price we can in a definition to why we can use these levels. Like I just showed you, the zone is like coming from all the way back here, and we were able to just visually look at the chart and see that this area has some sensitivity from the weekly down to the daily, just this blue line, and then this blue line. And then all of a sudden on H4, we were able to refine ourselves back down to this level here. And even H4 alone, we can just see that once price broke through this zone, we were able to determine that we're bullish, and then price started to reject this zone that just drew from different colors. And once it was rejected a couple times, price flew and it swung from there to the next zone. And I don't even know where these zones came from. I just drew it. And you guys saw me just draw them. And it happened? It just bounced from here. And it just kept going from another point to point it went. So that is how we're going to use multiple time frames with decision levels. I want you guys to start using them that way. Okay, so you guys want to know the bulletproof system for trading. There is no bulletproof system, by the way. What is right and what's wrong? There's no bulletproof vest that you can wear with day trading. So there's no, when I showed you decision levels, right? This is bullish decision level. And you're marking out your guy from here. Well, I told you that you want price to come back to this level here, and then you'll buy. But we can't say that it's going to just break and continue going down. Or what can happen is you get something like this, and then price breaks. I want to show you things that I'm going to show you how it doesn't work. Right? This is me showing you that this is something that you will see as well. This is something that you also see with regular SNR, even engulfing systems or even smart money, right? This does work. This doesn't work. There's nothing wrong with it. But I trade decision levels and it works for me, and I take my chances and I take
Yo,
my probabilities. So what I'm saying is we use multiple time frame now to assess whether or not taking this taking this next movement here, is it worth it or not? Or is it okay? Or is there any potential for us to take this movement here from
hey, Rabbit.
information that's being presented? Yes,
Sorry, I just had a quick question because
go ahead.
going through my back testing and stuff, the engulfing candles, do you some it can vary from definition to definition, but
Yes,
do you like if there were to be wicks on this, would you still consider that an engulfing candle from open and close standpoint? Or
100%.
okay, that's what I thought. I just wanted to confirm.
Yeah, yep,
Okay, sorry.
no problem. Yeah, you can use it doesn't matter how big it is.
Okay, yeah, that's what I thought. So I was going off that, but I just wanted to double check with you because some people will be like, no, no wicks. I don't know. I
Yeah,
just
I mean
figured
the
I'd
marking is
confirm that.
for engulfing, it can be like this, right? Some
Yeah,
people, it's like that supply and demand traders, they'll say this right here,
the open and then the
open down
wick,
to the wick,
wick. Okay.
or they'll say 50%,
I
or
just do the I would just do the candle personally. Um,
yeah, or they'll say body to body.
yeah,
Um,
body to
the
body.
marking is like the order block level,
Yeah.
right? This is the order block level. down to the order box, the open, or no, excuse me, for this is close of this candle, or the low. No, there, I don't want to say there's right or wrong, but to mark the decision level, it's this level here.
Okay.
Is
All right.
it's
Thank
this,
you.
yeah.
Yeah, I just wanted to just double check and have that on the recording. Just I'm sorry. Like I
No,
just
no, no, it's a good question because it's good for the recording because
Mhm.
you can refer back to it, and
Exactly. Yeah.
you can confirm that
Yeah.
it doesn't matter. It's just that I wish I knew this when I was trading smart money because it would have kept me a lot of trades.
Right.
When I seen the system,
Because we use the
when I
Wix.
mark
I
out,
remember that.
yeah, when I mark out order blocks, when trading smart money, if I knew the system above decision levels, uh, there's two ways to look at it, right? Whether or not this is going to hold or not.
Yeah.
And for me, if I seen that this candle closes below this, magical decision level, um, if I knew this very single rule, then I would close out my buys.
Mhm.
And because what happens is this gives me a signal that maybe there's a chance that price has a potential of going down.
The close below the decision level there.
Yeah.
Okay. Yeah.
Let's just define that this level is coming from the weekly, daily, and H4, and let's
Strong
just
level.
say
Yeah.
we're looking at, yeah, strong level, and this bullish engulfing gave us a confluence that we're bullish, and that this movement from here to here, it has closed above something to the left that gave us an indication that we are bullish from this point on. There's something here that price gave us to indicate that we want to go above this line. And then any pullback down is a opportunity to get involved. This arrow here indicates that there was probably a decision level that price broke above. Let's just say this open and close. For theoretical purposes, so let's just say that price closed above this gap level, and this is an important gap level because this gap level took out something previous. It's a game of cat and mouse because you're going to look for the shift in the market. Did this previous guy cause a shift in the market to push price down? And it did at one point in time, making it a significant level. When price finally broke it, what broke it? It's this guy right here. So I made the decision to break above this guy. So then I would tell myself that any pullback down is just an opportunity to get back into the buys. But then I seen that price broke below this level. I've seen that price close below. If I'm a smart money trader, right, this is what happens. You're taking the zone, you're marking it, waiting for price to come back in here, and you're going to buy. Then I wish I knew this before because I can close my buys a little bit earlier than before. I can close it before price takes me out. My SL, let's just say, is below this line a little bit. I can reduce my loss by a lot because now that I have this earlier sign of continuation to the downside, that there is a possibility now that because price came below this level, this guy can go like this. It can do that. It doesn't mean that it's going to completely reverse, but it means that it's going to give us lower pricing. So do I let myself it's painful sometimes to be in the drawdowns. Do I let myself go through the pain? Okay, so maybe you might define that no, it's not worth it. Maybe I need the rejection above to give us an indication that price wants to go up. But if it's a smart money guy, what they're doing is they're taking this guy right here, and you might go up and see that price is going up like this. You're like, oh yes, I'm in profit. And all the while, all that price is doing is maybe coming back to decision level up here that caused this breakout to the downside. Let's just say it is a gap level. Let's just say from here to here. Because, right, this gap level flows below this guy, and it's just retracing back to this source point to sell back down. And it goes and takes you out and smart money. But we didn't know this stuff when we were trading smart money, right? We were just taking the zones and what caused the break of structure, and we're gonna take this buy here regardless of it being violated or not. But using decision levels right now, we're going to be able to discern some things. Multi-time frame, I like to start with weekly. Um, Weekly down to H4. Those three time frames will be what you will use from here on out. Monthly is, I cannot say that no, monthly is wrong, monthly is unacceptable, monthly is not good. I cannot say that, but what I can say is that it's not consistent with what weekly and daily is giving you. Because daily, we know that at the end of each day, the daily is going to close at a certain time, right? There's a closing time for the daily market. And we also know that for weekly, there is a closing time for the weekly market. But we cannot consistently say there is the month is going to end every Thursday, every single week. I mean, every single month, sorry. We cannot say monthly is going to close on a Thursday every single month of the year, making it difficult to be aligned with weekly and daily, making it so then it's harder to design a weekly swing in comparison with daily to um, get an idea of what's going to happen. Um, that doesn't mean that monthly is completely invalid because monthly, this is where the big guys are trading from. People are looking at monthly, making critical decisions and allowing themselves to take a risk, and they're marking out levels from the monthly as well. Um, but I like to use weekly because I mean it's an extra step that you can use to take, but I don't think it's necessary. Um, and again, to simplify and make things a little bit more easier, um, if monthly is something that you're going to look at first, and that's only going to be refined to the weekly anyways, you can skip monthly ahead already. Um, but if you want, you can use even the 3 month time frame. You can use start from there. But to give you an example, um, no, you don't. You can actually just skip all of that, and because we are the intraday traders, retail traders, we're not trading from weekly, monthly time frames. We are only just analyzing it, and we're gonna take a trade maybe from M30 and each one, um, lowest M15, as low, if everything lines up, but usually it's going to be around M30 H1, and you just simplify your, because what happens is you get exposed to a lot of information, a lot of information, an engulfing level, engulfing zone, SNR level, SNR zone, decision level, injection, trend line. There's a lot of confluences. But if you can simplify just a few confluences, a few schools of thought, and see, get confident to see that this is giving me a reaction, then I'm good. Like I don't need to use all these all these types, what's liquidity, what's fair value, what's um 50% equilibrium, what is a grip structure, what is a sweep liquidity, what is um a true pullback. It doesn't matter. We don't need to know, but as we can use multiple time frame to study for rejection and breakout, then you could be like, all right, I have a rejection on the weekly, so let's start at weekly. Um, just for example's sake, I want to give you an example from here for multiple time frame. We can probably see already that it's coming from this area here on the weekly. You're gonna say, oh, well, this is a support resistance. I thought we only use this. And if so, price closed below this weekly level. But if I go on to another broker, because I use that is Oanda. This is um this is another broker, FX Open, which has a 2 o'clock closure. Oanda has a shift of 1 hour prior. So you have a 1 o'clock closure. On the H4, it's 1, 5, and 9 for Oanda. For any other broker, it's 2, 6, and 10 o'clock at 2, 6, and 10. And then you can probably look at this level here again, say that, oh, okay, this is your SNR, and this is also even close below. This could be tricky because you're like, okay, well, I thought this was a decision level, but you can see when you drop down a time frame, inside of the weekly level, there is daily decision. Okay. Oops. Yes, it came down to the SNR level very nicely, but also it came down to our decision level very nicely. And we actually get more information from this level.
Bro, like I have one doubt with that
Sure, go
decision
ahead.
level.
Yes, yes,
Can
come
you
on.
just go back like to left where
Yeah.
like we marked the level? Yeah.
Mm-hmm.
So how this is a decision level? It broke nothing on the left side, right?
Yes, it did. It closed above this level here.
Oh, okay,
Okay,
yeah.
and you're gonna
Okay, okay.
say,
I was
okay,
like waiting for this close, like okay, so
no,
yeah.
no, nope. That's a good question because it's a good point, and I can answer this very nicely for you. This is the current market price pushed down. So you are looking at the bullish confirmation. The SNR way to do it is the breakout of this level here. That's what confirms the breakout of this movement. You need to see price reject the daily and break above this daily level for you to be bullish. Now we can get earlier signs of higher pricing when we can observe previous decision levels being broken. because we don't know what's going to happen. For a daily candle, there's 6 H4 closures that needs to happen to complete. So that's a lot of information. How can we know? How can we get a sense of where we're gonna go before that? We can use the lower time frame, H1, H4. This is right almost 330 pips. So that's a lot of distance to cover for a movement to to give us confirmation that price wants to go that direction. Because that's what we want to trade, right? We're gonna look for the support. After this rejection, we want to look for the support and we need to see the confirmation of the breakout. And it needs to travel about 330 pips. But what I'm here to tell you is that how can you get an earlier sign for you to get even involved into this buy? Because right, this buy happened. This buy came again after how long? This buy came in after 212 days. Does that mean that I have to wait almost 60% of the year does that mean that I cannot trade all until the price comes back here? Does that mean that? No, it doesn't mean that I can't trade the gold until it comes back down here. Because look what happened. It pushed up for almost a year. Yeah, it pushed up. So for me to trade this sell, I mean buy, you guys can see that it's not that's not how you trade it because we don't know if it's going to come back to this level. So how can you be sure that how can you get a sense and understanding again? How can you trade this? Use multiple time frames and we will look at previous decision levels. And you asked me, well, you asked me, well, why do you keep pointing this level? If you look at this point, this was where price found some type of support. It stopped there and it made a rejection. And you can see that price again stopped and made a rejection and then a rejection. You can observe that was happening. And then you'll ask, well, then what else? You have this push right here that closed above another level. So you have this gap level. So you see the level that took price down to this area of rejection being taken out by this point right here. What caused the breakout? This level. It pushes up, and then what it kept pushing up. That signified higher pricing. On daily, that gave us a sense that maybe the next daily candle is going to be bullish. So now this is a daily look. Let's go into H4. I'll go back into this right here, but let's look at this real quick. Now we can go to H4 and observe something else. Well, okay, these are my daily levels. Where are my H4 levels? I'll leave these as they are and not mess with them. Can observe that as my daily, and I will observe this as my daily. No simplifying, but now it's observing. The next thing we can see is this is the H4 level here. This is an H4 level here. Now it's just leveling and marking, identifying multiple time frame levels. This is an H4 level here. We can both agree to that. This is type 1, this is type 2. The most recent, what caused this daily breakout is this gap, H4 gap. So what we're going to do is mark our level. We're going to look at what exactly did this movement do. Let's color this purple. On H4, we can identify a couple levels that has some type of sensitivity for this closure, or that should, or that will. why we can mark out this level here on H4. Okay. Now we have to ask ourselves why this level. Now, from this gap level,
It broke previous level.
it broke the previous level. That caused what? Price to push down. Gave us this movement. If we're quick enough to see this, that's almost 140 pips on the H4 candle. That's beautiful, right? You can get out of the trade 30, 40 pips before the candle even closes, right? It gave us an option to give us an opportunity to sell. And then later you see that it found something lower on the higher time frame to break out and switching our shift, giving us our shift in the market action, price action, is that this was the key level that you had to break for us to give us a sign that price wants to be bullish again. And then what happened was price came back to the level and then it gave us an opportunity from again here. So then now let's see. I hope H1 gives us H1 works here. Okay, H1 does work. So now we will look at H1 and look for some more information. We'll do some more examples of this. This is exactly what I want you to. What? This is this is a good example. I mean, yeah. Within these H4 and daily levels, we're going to look for reasoning on H1 why I should even take this buy or why this level is acceptable and maybe why it's even worth it. Remember when I told you timing is one thing that we're gonna go over. Time is also a factor. Um, we can see that this is going to be this is pre-Frankfurt Open, so this is Tokyo session. We understand that London session is going to come in. Maybe you're not present there at that time. That's completely fine. Maybe it wasn't perfect for you, but what we can see is there are levels here too on the H1 time frame that can give us this refinement if we really, really need it. Just being able to identify that why did I just pick this level? So daily we already was able to confirm that this gap level, this H4 gap level was the reason why this daily level broke, right? We can just technically speaking from this system of way of analyzing, that's what I know. I can't say this is why, but this is from technical standpoint, this is where it happened. That's what I know. From here, it broke this daily. And all I need to find is confluence within this range at current marketplace. Where can I find a refinement? So we all know I have to confirm H4's breakout, right? We see that this is an H4 level at current market price. This is H1 as well. H4 and H1 line up together. So that is good. They both line up together. This movement came from here. So the lower you go, the more levels you're going to find. But you can see it broke this level here on H1. So that gives us earlier indication that we're going to get higher pricing. Just this guy alone. I mean, it closed above the daily level here as well, but it also closed above this H1. So when we are monitoring this in real time, because we have no other, when this is happening in real time, we don't know, right? What's going to happen. We only know we have to mark these levels and we have to mark whether or not it's going to break or reject. In this example, price broke it, and it broke our daily. H1 gap broke H1 decision level here. We make this white. Oops.
So that in turn would make the gap the new decision level.
Yes, exactly.
Right.
This is like your source point, and then
Yeah, gotcha.
this is your breakout
Could you
level.
could you scroll down
Yeah.
briefly?
Yep.
A little more, just to the bottom of that structure.
Yeah.
Yeah,
Let's
because
get
I would like the way I was drawing this up. It was like break there. So what do we have like this level down here? And I'd always have that marked up just as
yeah.
this
Yep.
area of structure within there. You know what I mean? And then I would also be marking up the gap levels when price would just you know clear off like it did here. So
Yep. So check this out. All right. You're right. A decision level, breaking an SNR level, like a classical
yeah,
SNR level, is valid. That's a
okay,
breakout. Like,
yeah.
so you'll ask yourself what broke it. Uh, you will then mark that this is your H1 gap level. Yes, this is valid, but you can also, before that even happens, because you don't know, also have this breakout here coming from down here. So you can
Yeah.
confirm all of this happening. Um, you have this daily level, right? You can confirm all this is happening from H1,
Yeah.
respectively. Like, where is it coming from? It's coming from here, on H4. It's not coming from, there's nothing there on H4 as far as decision level goes. Maybe there's something on the left here. I just want to see. Yeah, there is. It's an important level. We're just gonna mark it, right? We're just gonna mark it and move down a time frame. Nice. So we see that H4 level has sensitivity. It's broken through, and H1 is being rejected. Upon the rejection, price then creates a decision to break out here. So there's a
Right.
lot
And
of
that's that
there's a
New
lot of
York.
noise here. Yeah, there's a lot of noise here. But I want you guys to not get lost in the sauce. Like I said,
Mm,
weekly daily H4 is enough to give you the overall direction. And but we need to work. This is what we need to do. We need to work from top to bottom back up because as we're observing top down, that's hindsight information. Top down technical analysis is what we do based off previous information. Like we're marking our levels. Now we have to do is move our way back up and complete the picture of the top before we go back down. So in order to do that is look at H1 or M30 or whatever, however low you go. I'm not gonna teach anything lower than H1. Entry, you can go to M15 if you really want to. And I will show you how. But as far as analysis goes, to keep it very simple. I mean, I'm even cheating right now, showing you guys H1, but it's not necessary to get the direction. I'm just showing you guys an example of like how to view the chart. And I'm just showing you how you can use H1. I'll show you how you don't need to use H1 to get direction, but in a way for me to illustrate this system, I have to show you how H1 is also performing as well. And you will know why, because when I introduce uh open, high, low, and close and relating to time and stuff like that, about how you design your weekly swing, you have to look at the weekly candle and you have to observe like if weekly is bullish, which we're looking at right now, or if weekly is bullish, and there's any pushback down, then what does that mean? Um, when we get weekly bullish and daily is bearish, then that would mean that there's something on H4 and H1 that made daily go bearish. So we would actually have to play it from our way back down, I mean, like, top down to back up. What made price go bearish? And we have to play from those levels, not to confuse you and not to put in too much junk in. Um, but what I mean to say is that we have to design our thoughts around the higher time frame bias and play from those probabilistic levels and work our way through the price. And the fact that, okay, now price closed above this level here gave us indication. Even here, if we look, it's nice to see these things happening in real time. When you see that this is our daily level being broken through, and at the same time, this H1 gap, it closed above this H1 key level, then you get signal that it's gonna push up. So we don't know what this, okay, after this candle closes, we don't know what the next one's gonna do. This candle, it could push up, it could push down, or it could test these two levels, which it did like so right here. And that could be your entry right there. Or you could wait until price comes here. But it was a break and retest of your previous decision level. You could take this guy and push up price, and if push up 60 pips, you can close your trade out, because, or you can hold it, right? Now you can start managing the position in a way where you have this level that pushed the price above the daily level, the H1 level. H1 broke out. H1 broke above a daily level. It broke above this H4 SNR. You can start lining yourself up for success. And let's just say you got into this guy right here. I'm not saying we did or not, but let's just say we did. What if for whatever reason we got in, we seen that break even retest of the decision level, and we collected 20 pips or something. Let's just say 30 pips or 1 to 1.5 or 1 to what or something. Let's just be respectful. Um, you put yourself into a position where, look, before this candle even closes, I've already reached my TP.
Yeah, you're probably hitting that in 5 minutes, honestly.
And that when that happens, do you close the position out, or
Yes.
do you can, and you could be done for the day. And
Well, I
you
think this is where it comes into like, I'm sorry to interrupt. I just
no, but
my 2 cents on this, bro, is this is how I've seen the collapse of people, even my own trading, when it comes to like, I mean, trade management in terms of like if you have it set at 1 to 1.5, this stuff happens, right? Where it just explodes, and it's like, damn, I could have kept this open for 2 more hours and made way like 10 times as much as I usually do. But what about the times where just wicks your take profit and comes back and would have stopped you out?
exactly,
Yeah,
exactly. You
because
don't
that
know.
happens. Exact. Yeah, you really don't.
You
And this is
don't
a
know.
win. This is a win.
This is a win.
Hmm.
That's a great observation, because the thing is, when you say you took this position and you want to get a little bit more creative and you want to maybe hold it even longer. Let's just say you want to hold it because you're able to decipher that this is a higher time frame zone, so this is not only going to give you 20 pips or whatever, how many pips it went, and before it give you it went, yeah, 15 almost 20 pips to give you this movement, and you hit TP, you can get creative now, already anticipating big movements, and this is a New York Open. News just released. This is an 8 o'clock, 9 o'clock candle, 8:30 news release. There was probably something that gave you indication that, okay, 8 o'clock candle closed above the decision level. It closed here. You're probably, even if you just look at this time frame alone, when you just open your chart, you just woke up for New York session or something, and you see this happening. You saw that breakout. You're not gonna take the sell. You're gonna take the buy because
Yeah.
it broke your decision level. This gives you, when you see this happening more than once, one time, this phenomenon happening more than once, you'll start to look for confluences for the buyback up, right? You would, well, if we just look at H1 alone, then you'll ask yourself, well, what caused the break? This guy right here. And then what did it break? This guy right here. So now you have two levels to monitor. You have this one and that one. You can narrow your bias down to these two levels and say, okay, fine. When this candle closed and then this candle is opening and it dropped like this, it's actually like a full-bodied bearish candle. Let me just make this gray. It's like that, right? And then all of a sudden you see the level starting to reject, and it's creating the wick, and then starts to turn yellow and go your way. And then it creates that wick. And so when you see this stuff happening in real time, and you have confluences, stuff like your trend line lining up with your decision level, maybe something like uh this let me see if I can find something. Uh, let's see. Yeah, right there. That's one of our trend lines. With that we trade. 0.1, 2. When you have those confluences, you don't need to enter by here, by the way. When you see that happening in real time, you can even enter above here. So that's probably confirmation for you. And that's completely fine. When you start to see that your level is broken through, and then the next candle it has opened, we cannot identify this level and our confluence and the level being rejected, knowing that H1 just broke above 8 o'clock candle after rejecting these higher time frame levels, and then H1 just broke here, and then it just rejected one of our trend lines. Trend lines, it's like a, right now it just sounds subjective to you, but we have like four or five signature trend lines that we will look at. And you will back test, that you will forward test, and you will see that they work. For some reason, they just happen to show that it conveniently lines up nicely for gold. Um, or you can pick one or two trend lines that you like the best, and so maybe if you don't you'd like to use trend lines, it's up to you. But I use trend lines, and I'll show you how to get these types of entries here as well. But even if you didn't even use this level here, I mean this trend line here, for now, what we can say is that the breakout level was being rejected, and as a form of confluence, our timing was that, all right, when we see this happening and prices going up, you can start to line up, you can allocate some risk here and um put something there and buy and monitor price action. And that is when you can assess the risk. And maybe you can just put your SL below this decision level right there, like that. So you can get a tight entry. And yeah, like I said, 1 to 1.5, it's something you can do. But now it goes to explain something real quick. You've hit your TP already, and to manage the position, we can see this that daily closed above this I mean H1 closed above the daily level. So you can hold it, you can take off 70% of the position. You can see how creative you can get when you start to bring in risk management into the picture. Because you and I can get the same position, but it can be different results because we don't manage the position the same way, you know what I mean? It can all happen differently. Okay. So moving on, you see how many levels we have just going down to each one alone? It's a lot of levels here to consider. So do you really need that many levels? You ask yourself, like, or do you need to go down to lower time frames? You'll ask yourself, can I just focus more on these higher time frame levels and reactions coming from them and trade from them? And respectively, I can say yes, like you don't need to make things hard. Okay, so now moving forward to back to our example of going back to our example for this top daily level. Go to H4 again. It's top daily level. You can see again it broke. So going back to our example, okay, what is our H4 level that it broke? Okay, see that? Okay, this, let me take this out. Right, this date from here to here closed above this H4 level, and then we were able to identify this H1 level, and it came back down to them, and it went up. So what I mean to say is that this level has an area of sensitivity. After all that that just happened, price swung from here, and we could get involved in the market before we waited 212 days for price to come back in here, and you know what I mean? Okay, so moving forward, let's just play with let's just play with whatever is being presented now with us. Daily is bullish, right? Because daily closed above H4, H1 level. But before that even happened, we can get earlier sign of that happening on H1. H1 closed above these daily levels. So I hope you can understand, right? That once this 10 o'clock candle closes, that gave us an indication that maybe the chances of price going is much more higher than it selling because it closed above a daily resistance level, right? This push. It closed above. So when we go back to H1, chances of price slamming down are slim, or the likelihood, the balance scale that you would be leaning on is more on the buying side because my system is telling me that the gap is your system, my system, everyone's system is telling me that I need to be on the bullish side. My indicator is telling me I need to go. Supply and demand is telling me bullish. Smart money, whatever, break of structure, whatever, support and resistance, even if from the most basic level, is telling me I need to be bullish. There's so many ways that you can determine that, not just using decision levels, but whatever it is, something is telling you I'd rather be bullish. The view that you're seeing at this New York session momentum, this lineup is telling me that I see the price being bullish, right? Look at the bullish momentum. Uh, the capacity of one single bullish candle outweighs all of these bearish candles by a mile. There's no bearish candle within this range except for the one that's been taken out, right? This is the biggest one, and it just simply broke above it. And ever since then, it just kept pushing up. So whatever it takes for you to make that conclusion that you're bullish, it's gonna happen. You're gonna see it happening. And you're able to get involved. Even when you can get the direction right, you can just simply set market orders. I've seen people do it, bro. I'm not joking. I've seen if people just simply get their direction right, they'll just market execute and put their SL below a certain key level and be okay with writing out this position. Like Raja Banks, for example, right? He will do something like that. Or I mean, I can bring in a lot of names, but just even Sean FX or Sean D. I mean, there's so many people that I can name and that are in the, you know, rich, Mamba effects. Like I can bring in, or whatever. Like, there's so many ways I can. What I mean to say is like, uh, y- simply getting the direction right is 80% of the job. Entry come later, and I'm not going to come into the game and show you guys, oh my God, there's uh, not to mention any names or anything, but there's like 7 different entry types or 8 different entry types or 10 different ways to enter the market. There's literally one way, and it's your way. And it's whatever you think. But I think the best way to do it is once you can get direction right, as long as you're on the right side or you feel like you're on the right side, you have the reasoning like, hey, brother, I think that market is bullish for this reason, this reason, this reason. If you can tell me that and you can believe it by showing me same thing happening a few other times before, like, hey, this is why. I have evidence that this schematic or this pattern or the structure has shown that when this happened before, the chances of price going the way that I think it will go are much higher than the way it shouldn't. And I mean, not saying that I need you to sit here and collect, pages and pages of examples, and I need you to do all this homework and, exhaust yourself. Maybe you can do it that way. Or maybe you can do something like forward testing and it just seeing things happening for you. So you get comfortable with system and you're like able to exhaust your mental capacity, spending time focusing on how the candles are being formed and how they're closing, and using that information to get involved in not. So just to play around with this range on this time frame, we were able to get our direction correct from this breakout, this H1 gap, H4 gap. It broke above our daily level, and then it retested some levels here. Now, let me clear the chart. I will actually leave the daily levels there. I just want to get rid of all this noise. I'll leave the H4 level there. Maybe it didn't react, but leave it there because that gives us an indication that we're bullish. And just get rid of these guys. All right. So I like to encourage you guys to focus on these higher time frame directions and play from them and understand that this what I just showed you encompassing everything that I just tried to explain. Maybe you can watch the session a few times or whatever, but if you can replicate this and you know uh just repeat this cycle of analysis a few times on your own, um then you can start to explain it to yourself like how I just did to myself, and it will help. Like being able to explain it in your own words is more important than hearing me explain something. Even if you cannot explain it to me, if you can say it to yourself in your own words, or even just understanding it in your own brain, it's probably going to help a lot more than me just talking, you know? So yeah. Um, the closing price, I just have to explain it because it's part of the mentorship. Um, whichever broker that you use, when you switch to another broker, like I am gonna do right now, and just work from this, you're gonna get some type of discrepancies, like how I showed you from this broker to this broker. In the beginning, I showed you, right? Um, same thing is different, but you're getting similar information. Let me go back to the first one and we can start working our way to another different example. But from the same view. This goes to say that when you have a broker of your personal account or your prop firm or something, um, you want to determine, or even for me personally, I started out using MT5. Why did I use MT5? I use MT5 because of the capabilities of the platform itself. On the phone, I can manage my position on the screen live. I can set my SL much easier than I can on MT4. I can market, execute, one button pressing, one button entry right in front of me, just buy, sell, and then I can you do SL, I can slide my SL up and down, whatever. That is why I use MT5. And because I used MT5, I had to use ON on TradingView when I'm doing my analysis because it was comparative analysis to my broker. Worked as it worked equivalently to my broker. The information that I see on my personal account or on my prop firm was equal to Oanda. So then I had to look at H4 closures on 1 o'clock, 5 o'clock, 9 o'clock, which will have an impact on how you determine your bias because I don't want to confuse you, but the other brokers close at 2 o'clock, 6 o'clock, and 10 o'clock. The closing price of the 4 hour is going to be different because now your 4 hour candle, when you're trading New York, for example, right, is starting at 9 o'clock instead of 10 o'clock. Or when you trade London session, your 4 hour candle is going to start at 3 o'clock instead of 2 o'clock. You know what I mean? Or 1 o'clock instead of 2 o'clock. So it makes a difference, but um, whatever your broker is showing you, I recommend you to prioritize that more and get yourself around there. And I need to explain that because sometimes our charts might be a little bit different, but whatever you're using, I want you to use it that way, right? For me, I have Comex. I have the CME market because I trade futures. So it's the Chicago Mercantile Exchange. Um, and I don't do my analysis on CME at all. I don't. I still use Oanda since the beginning, and it was just it happened. So I mean, there's people who will say, well, Oanda is not too efficient because if there's an actual gap in the market, if there's an actual gap in the market, Oanda is just going to fill it and show it as a full body closure, as opposed to showing the gap. As opposed to doing that, Oanda is just going to it's just going to fill the gap for you, as opposed to show it like that, where their broker is showing this. So you're going to ask yourself, well, where is the gap level? What is valid? Which one is the point that I need to use? Because um candle closed here, but it opened here. Let me just draw what's for the example. You need to know this, and it's not that confusing. I just have to bring it up because you're gonna come across these situations where you have to we you're gonna be like, well, the gap is giving me issue, uh, because th this could be the closure, but it opened here, or this previous candle closed here, but it opened here. So which one did I use? That varies with broker to broker. And when price is coming back down to these levels, we have to respectfully, because we have been presented what from our broker is this information, and we have to see whether or not it gives us. We have to discern. Excuse me. Let me get the. I don't know. Okay, we have to respect that and just let's see. This is a bearish candle. We have to observe if this level is being broken or if it's being broken or if it's being rejected. I don't want to confuse you. You will come across this, but it's not like I just have to bring it up in this session because it's part of MTF. It just needs to be brought up. Because you will see this. These discrepancies. I mean, it needs to happen as far as closing price. Is when you're doing your real-time analysis, and this happens, you will have two levels, but in all actuality, you only need one. So let's just say that this was the actual price and the market should have opened up here instead. I mean, it will happen, and we have to just try our best to get around that. But that is out of our control. It is out of our control, and I just have to bring that up because you will come across it. But it doesn't happen every day. It doesn't happen every week. It just happens. We don't know when. Um, so I do want to just bring that into the fold and not spend too much time talking about that. So okay, moving forward. Multi-time frame again. Let's do this guy right here, like we were going to explain from the beginning. I had to show you this example. 212 days later, price came back to buy here. So let's actually look at this buy real quick, and see how you can get involved in what happened here on the lower time frame. So we have already determined these levels on the weekly level time frame. Let's just mark them out real quick. This is weekly. I'll leave them just the way they are. Orange is weekly for me. I'll go to the daily. And then you can see price came back down to this weekly level. Let me find the daily level. So remember this level here, right? I marked it out, this gap level. This is just me doing my analysis as in the morning or at night or something. I'm just marking out these levels. I see these observations and I see that price caused some type of movement up after a rejection. And I'd have higher time frame levels to consider. price and direction. So I see that daily level has on the daily time frame created a decision to break above right here, type 1. And what we see here is that it took out the level that took price down, right? So this gap, these two candles here, simply we can see that because if it didn't, what it would do is continue price down, right? That's the only other way. It would go down. It could even be like this, even with a big wick, but the only way is down or up. And in this case, it went up. If it didn't go up, it would go down, and it could be full body like this, but in this case, it didn't. It created an engulfing, and it gave us a visual effect that prices wants to go up after it giving us a breakout. This is a breakout on the lower time frame, and I'll give you proof of that now. So we mark those levels, and then we go to the daily time frame, and we see that okay, this is a breakout. Why? Well, there's an H4, it's very simply line chart, H4 breakout, right? This guy right here. I'll show you the decision level here as well, but I want to show you both so you have reference. The daily rejected weekly, H4, H4, it all rejected this level. We can all see this happening daily and weekly. H4 time frame is what we're on right now. H4 time frame is green, so you can see that H4, oops, H4 created a decision as well to break out an H4 decision level. Or you can say H4 breaks this SNR, but you alone, I don't mark out SNR. I mark out decision levels. So I will see that this movement on H4 is closed above this guy right here. So when I see that happening, I will look for evidence on H1. So when I drop down to H1, I'll leave everything just the way that it is. You already have a lot of levels and stuff on the chart already from weekly to H4. But now we see, okay, now we're on H1. What happened was H1 came down and it rejected this level. Now we can focus more on the precision, right? H1 rejected our weekly daily level. To get involved in this buy, once you see this rejection, you can use multiple things, right? In this time frame, again, this happened at 8 o'clock, 8 o'clock rejection. So before the example was 8 o'clock, it broke out. In this example, you have the 8 o'clock rejection. Okay, so now you see that price, it's just the complete opposite direction now, like flip side of a breakout, and now we have a rejection. We see that our key level something is on the higher time frame is being rejected on the lower time frame. From these levels, we've seen that in the past, price gave us a swing and it made a big movement for almost 60% of the year. So price coming back down into this time frame, into this level, having this sensitivity, giving us this rejection, and it closes isn't really much of a surprise. You were expecting these types of movements happening, and when you see it happen, okay, you can use things like time, 8:30. Let's just say you're waiting for some type of movement. When you see that 8 o'clock candle closes, the next candle, again, you will use confluences, things of the nature that will justify the entry for buy. I mean, you can enter this one here after you see the candle closed right here. So the next candle, your expectancy of it holding as a buy is the only way. Is when you see the candle opening here, and initially, right, it's full bodied, bearish, and you are a little bit nervous to make a decision like, should I enter here or no? You already have a couple pieces of information, right? This rejection here, and this rejection was unable to surpass this support level. So you have now a level, an area that price rejected, and it just denied this zone. So now it was unable to go below. You have an opportunity now to make a decision to go up. So that is a confluence as well. This confirmation is the rejection of a level, right? So even if before this happened, right? When you see this happening and then you see that after this rejection, price was unable to break this resistance up here. Let's just say, for example, from the line chart, because I have to show you that way for you to understand decision. These levels here, price was unable to break these levels here until this point here. So I'll just leave these as purple, or actually I'll do as white. SNR level, classic SNR level. And then our decision level, let's just say right here, H1 is right here. When price came up here, it made the decision to break above. So this guy right here gives a sign that this push up finally broke out. Something broke out. It broke out our decision level on our SNR. So we have a shift in the market now. All this selling, finally, the structure was broken above. Anybody who's trading any system or smart money or supply and demand, they will say there was a sweep of liquidity. I just have to explain it in other schools of thought so then you guys understand the decision level, right? This was liquidity, and then structure broke. So then price came back down to something here, and it went. You can see now when we shift to decision levels, we have our higher time frame levels. H1 decision level was broken above. So this type of closure with the way we identify breakout in tandem with regular SNR, this type of closure above can give us signal that any pushback down is like a pullback. So this is H1 and it gets a little bit noisy, but let's go to H4 real quick. We are working our way back up now with multiple time frame. And when price couldn't, this daily level, right? When price couldn't, let me go back to H1. Sorry, I have to use H1 because it's not, this is all printed action, so I can't really justify. When price came back down, it just couldn't sustain itself above. So then if you miss this guy right here, that's fine. What happened the next candle gives you confidence. Is the next candle, actually close above the daily level, finally, right? After this breakout, again, price was able to, now we're looking at red lifetime. We're looking at lifetime. This is our observation, is that we have a rejection, right? The body candle went above, closed above. If you missed this entry, no problem. What you see here is price reclaimed itself above this daily level, and then it retested on the H1, just open and close, tap and go. And then you will also use stuff like this. Maybe I don't think it's so. You can, all right, fine. You can use that trend line. Just the simple fact that let's just, yeah, we can use that trend line. It's just that price breaks out, and it's a confluence that this daily level was being rejected. Just looking at this alone, that the idea is that price closed above this daily level. After rejecting these levels here, their daily level was now, it closed above. So now the chances of me selling are going to be much lower than buying, because New York session closed with the New York session opened with the rejection. The next candle opened and closed above the daily level. So then the next candle, I have to monitor what uh, levels need to be controlled. And I can see that the daily level is the most sensitivity at this point. I mean, it just seems like coincidentally the level here is daily. And if you were looking at lower time frames, even so, let's go to M30 for some more confluence to get involved. Obviously, it gets a little noisy. It gets a little noisy, but it's okay. On M30, we have this decision level, right? This is great. This is great. I mean, M30 for M tree, I mean, you could use this trend line here, and you can get this guy right here. I will show you guys this later when we learn about trend lines and entry, but when if example is kind of tricky, by which that there's not much confluence I could show you even on H1, yeah. But I know what I'm looking at. M30, this is what is more explanatory for me for you guys, is that okay, fine, M30 created this decision level, and the model of understanding is that something was broken here, right? What was broken is the decision level that took price down to this level here, right? So it's this gap level. You can see this bullish candle, it closed above this gap level. After rejecting these weekly daily levels, M30 gave us this rejection, right? Because it was in maybe 8:30 news. And this momentum came in after the rejection, and it closed above. So it's breaking out. And inside of it, what we can see is we have breakout of multiple decision levels on M30. We also have this breakout here. What's the level here to consider? You guys can look at this picture, this basic look. So price reclaimed its position above this decision level, and then it retested it here, this large wick. Then the next candle, if you missed all of this movement, then the next candle we can also observe that this was a decision level here. And just very nicely, it just conveniently retests that level and it leaves. And again, you can just enter, once you get the direction right, you can just enter after it's leaving, it's slowly leaving. You can enter at the market, even here as such. And just this alone is good enough. It's even so, right? When you see price breaking out, just giving you basic, like, like chicken example. Like, it's nothing I want you guys to do, but the fact that you're on the right side of the market is good enough. You know what I mean? This is just a very cheap way to enter, but the advanced level, the entry protocol is not there yet. But you know, Roger Banks is entering right there after he's seeing that price is breaking out, and if he can collect 20, 30 pips, that's enough for him. The reason why I say his name is just that this is heat trait support and resistance. It's very nature right here. It's very, very simple way, just studying how the candles are being opened and closed at these times. And it's good. It's a good system. It works. But there's a handful of students of his that don't understand what's going on. So I just want to let you know that it works. Even though it's a very simple system, and my system, it looks a little bit complicated, but it's not. And the way the enter, yeah, you can see why we're entering because we have the decisions being made, and then the expectancy of higher pricing is there. And when we see the next candle open, we can put our SL below the decision level and ride the price for how long you think you may go. Let's just say 20, 30 pips or risk to reward 1 to 1.5, 2R or something. And you're able to achieve those things. But even so, if you miss that, even this one right here, when you get the direction right, right, with the multi-time frame, the rejections, and then closure, again, you can see, again, you have another opportunity to get involved, and you can combine again the trend line stuff right here to get involved. This buy here, if you miss them, then you know what I mean. Like, there's always going to be an opportunity, and that's how you see people getting positions here. How you see people getting positions here. How you see people getting positions here. But we're not here to discuss that because this is like magic. A lot of people showing this stuff is either very skillful, they know what they're doing, um, or they're just playing with demo or something like that, or using very small sizes, or to keep it positive, they're using very small position size, or they're taking a majority of their position off to keep it very, very, very positive in here. They're taking the majority of their position off. Maybe if they have 5 lots or 1 lot, um, once they reach 20 pips or something, 30 pips, they're taking 90, 70% of the position. So they could take this position, leave it there the way it is, and then take a screenshot and share with the public, and they hide their position size, which I never do, but people do. But you have this guy right here, you have this one right here, and then you have a position here as well. So, like, do you need all 3 entries? No, but can you take them? Yes. Um, again, do you need them? No. Again, okay. So that's how you can use multiple time frame. Let's keep moving. I'll show you a few more examples so you can wrap this up, and then we will be able to move forward with more multi-time frame stuff for the next class, and just grow from there. I want you guys to get scratched a little bit in the surface, and just understand how I'm looking at this stuff um, from multi-time frame. I want you to practice this stuff, kind of like what I'm showing you, and then we're gonna come back and refine our understanding, and then we're gonna come back and refine our understanding. And I think by then, when we do a couple more of these, you'll be able to explain it to yourself. And that's all that matters. Just trying to explain my thought process and explain to myself that this stuff is not that hard. Let's look at recent price action and how you could get involved into this stuff right here. So my view is that price closed, creating its all-time high in gold. As far as reference to closing price goes, you can see that closing price on gold is that it has created an historical price action. Gold has created its all-time high, right? This level here, this point, whatever you want to say, whatever, this level here, created its high, all-time high. Every time that happens, gold does a pullback. I'm just giving you my brief idea, right? These levels, every time price breaks, chances are it's going to retest something back down to go back up. Gold, by design, is a bullish instrument, like stocks. It's just one of those things that will, like Bitcoin, like the dollar, it's just, or like a stock, it's just naturally a bullish instrument. That's why big time investors will turn to gold whenever there's uncertainty in the market, and they will put their money into gold when the dollar isn't performing well, or when there is fear or doubt or uncertainty. They will go to stuff like gold, commodities like silver, go to natural products like, oil and stuff like that, or, stuff like commodities and stocks and bonds and stuff. To keep our logic and wording very simple, gold is just bullish, an instrument, and it's when it breaks out, anytime anything breaks out, there's always going to be a pullback, right? Very basic. We understand that it should come, something should happen, right? It's not just going to keep going. That's not going to happen. If it breaks, it needs to at least retest this level here, right? Now, with support and resistance, the basic idea is that with my system, I don't want to confuse you guys. I know I am, but I guess I am. I know I am, and I should. I guess I will. Um, our system is basically decision level RBS SBR of a decision level. Okay, decision level RBS SBR of a decision level. What does that mean? It means that it's just the break and retest of a decision level. It's the support becomes resistance, resistance becomes support of a decision level. Now, traditionally, in the traditional support and resistance method, is that if you want to take the buy from here, or you want to take the buy from here. That is just the natural support and resistance way of doing things, right? Something here, this zone here, or the zone in here. We can all agree to that. Just this very, very, very basic view, we can all say yes. Now to bring things into a little bit more interest to excuse me, bring things into more context, we have this decision level here. Just say this is H1, and we have our decision level here. H1. So by design, we see that H1 has broken above, and then H1 retest to this breakout level. And we have our source. Support and resistance by design is just this alone. So we have to monitor two things: closing price and breakout or rejection. So does price reject this level? Something like this. Does it retest? I mean, does it break? Yeah, does it reject this level? And then does it offer another opportunity to get involved again? So what I explained to you guys, the next candle, right? New York opened, New York rejected this level, price has broken out, and it found support around this level around New York time. It rejected this level. Next candle, and it's bearish, full bodied, and then you start seeing that all of a sudden it starts doing this. It gives us a wick, a sign of continuation. And the body, and we'll go over this even more detail when we learn about OHLC. But fact that we're expecting bullishness is that it should go down first. So when people say buy low, sell high, this is what they mean in a way. In a way, you could use that phrase into this idea: buy low, sell high, confidently. And if you don't feel comfortable with this risk entry, for example, you might say it might be a risk entry, but it's really not. Um, you're looking for closing price, so then okay, fine. Price creates its closing above this level. Let's just say that's the decision, right? Like I explained, or what we've seen on M30, right? This level was the decision to break above. And maybe this correction right here is going down, going down, going down, going down. Finally, something was broken here to the left side. So just like how I showed you right here, source breakout, our source is right here, and then our breakout was right here. So then what we see is, what we observe is for price to come back to these levels, open and go. So that there's a couple possibilities of how that happens. You can just get a quick open and retest here of the breakout level or the source. And what did I tell you, right? We're just looking at closing price. Closing price. Price has closed above these levels, and then rejection or breakout. And in this case, again, we see rejection, and then we see that price is rejecting again. So we start to line up our risk. This is what I just explained to you. Now I'm just drawing it for you, so you get some more explanation. So when you see, like, say example, this is daily, and for H4, price reclaimed its position above this level daily, and then price closed above daily, and then it rejected, we can see all of that. Then it closes and it created a breakout. We're just looking for the retest, and then like Roger Banks, we can enter right here and get 20 pips from there, and 1 to 1.5 or 2R or something. But that's just the basic idea, right? This is the basic view of support and resistance with a little bit of twist to it. We have some, you know, some things, right? That I just explained that is different from just this alone right here. Just a regular retest of this level, or coming back into this level here. And I'll show you examples of this as well. What I want you to know is that these are the two these are the two things that we're really monitoring, is the breakout level and where the breakout came from. That is how you will determine whether or not you be bullish or bearish on that time frame. For example, again, if this is a bearish example, I don't want to confuse you. If this level here did not hold its position, and this happens right here, you will see that this means that it doesn't mean a reversal. You can tell yourself you will see higher pricing. And just to be respectful, you can't say this is where the market is going to reverse completely, just blast out of the water. You cannot say now that it's happened, price respected this level above it closed. You cannot see that it's going to do this, break this SNR level because this level held. We just cannot say that, okay, the next candle is going to give us higher pricing back up to something above. And in this case, we see that this is the classic level, but then we see our decision level here. We want to look for price to either break or respect. So our observation comes from this. You can see, let's just say, for example, it respects the level and it will look like that. So the next candle is what our observation for rejection again. You're gonna look for something like this. This is great. You have this closure, right? Boom. Price closes this below this level and makes a decision. Again, what do you see? Close below this level here after making this decision. Because when you refer to the most recent decision, which is this one, it's really far away. So for us to get an earlier sign that this level now is being broken below again, right? We see this daily level, for example, at price broke above this level. That gives us a sign that we'll get some higher pricing. We want to take price back up to our source. And we see that when we monitor price, it's rejecting the level, and then boom, we reject it again and close below. So before we even get this breakout happening, right? Before we even get this happening, we can get early sign that we'll get lower pricing, just like how we did over here, that price will be going lower. Now, if you use this logic alone, I want you guys to watch this rewind and watch this segment, just this part alone, what I'm explaining to you guys. I want you guys to understand this inside and out. Inside and out. I want you to understand what I'm explaining here so that you could use it on the rechart. When you see that happening, you can tell yourself that that doesn't mean that price is going to go. We have to respect the market again. That doesn't mean we're going to make this a sign that the market is going to go completely down. What we can say is that the market is going to go lower because the overall direction is bearish, right? After this breakout. After this breakout. And then price closes below this daily level.
That's why I would say it's best to use the fixed RR for that.
Yeah.
You
Yeah.
know what I mean? Right? Because it's like, yeah, it could just drop. But like you said, we don't know. So
Yeah.
I mean hindsight's 2020, right? So like
Yeah, and I say it in a
yeah.
very like optimistic sense of air.
Oh, for sure.
You know what I mean? Like
Yeah, absolutely.
I mean so then like I'm not giving you guys false expectations that
Right.
you get like these massive RORs because I don't want to teach that way. I know of people
Yeah.
that do and they makes it seem like it's a bulletproof system, but it's not.
Yeah.
And I'm just giving you the probabilities of what I see worked, whatever, okay? Um
Right,
so like
right, right. Of course.
even so, okay, even so, like just look at this closure right here. It's that price gave this a closure below this level. This is okay, now all of a sudden multi-time frame is lining up, right? This is the daily level, right? H4. This is the H4 spectrum. H4 gave us this movement here, push up, and then H4 respected this H4 daily level, and then it reclaimed its position down. So now H4 is now bearish.
Yeah.
Daily is now bearish. So then next candle, what you can probably guess what I'm going to say is that you can look for something maybe like this, or maybe
So there
something
or at the top one, yeah.
up here. Exactly. It could do that. And then when we start to line up, confluences such as time and then trend lines, you guys can see there's not too many pieces to the puzzle. It's just more logic and reasoning to what I am showing you. You're going to see, look for like stuff like trend lines and stuff and see that you can get these retests below. But it's the idea of
Yeah.
breakout or rejection of lower time frames. So when you're doing like top-down analysis, if you're marking out a weekly level, you want to drop down one time frame below, just like how I've been showing you guys. I went from weekly to daily. I went to then H4. So on a weekly chart, there's about 5 daily candles. On a daily chart, there's about 6 candles on H4. That's what you're monitoring. You're monitoring those closures respectively. But the point I'm trying to make is when you drop down time frame, you're observing the level that you just dropped down from. So daily to H4, you're observing the daily level on H4. That's how you will start to work. And then when you go to H4, you're going to drop down to H1. And usually by that point in time, you will have a good idea of direction. And you can get comfortable just flipping through daily, oh, excuse me, daily time frame, 1 hour, 60 minute, 240, 4 hour daily, whatever, Next class, I will show you guys how to design, the weekly swing, the daily swing, and stuff like that. But what I mean by that is just looking at like I'll explain what I mean by this to get the cell right in just a moment. But I want you guys to understand why I use the weekly instead of the monthly, right? If I'm bullish on the weekly, it means that the weekly has broken some type of decision level, right? Because that's what you can see. What I mean by that is like this. Same thing as what I'm going to show you right here. Is that daily created this decision level breakout from here. So we observe this is a weekly. This is daily. So then when we drop down, we're going to look for this type of refinement or something that daily broke out. We can see that, okay, this is a daily decision level. And it broke above multiple daily refined levels from the weekly, right? Because we can see the daily closing above weekly. So there has to be a level also on the daily that daily broke above. Let me just show you guys. Daily, bring it across and you can see that it broke above these levels here. So it's like a break and retest. Oh, okay, so now this is daily. But it's literally what I just showed you guys above here, all that junk on, not junk, but all that stuff, and it's just showing you guys that okay, this decision level was broken above, and we are now going to monitor the retest of the decision level or the SBR level, right? We don't use SBR, but I'm showing you guys just the definition of what I mean by decision level is a RBS SBR of decision level. This is what it is what I mean by that. If you can understand this definition in your brain and get this across however you can get it right, this wording right here is what's going to be this right here. This is what it is the support, and support becomes resistance, resistance becomes support of decision level. We can see that price breaks above these levels, and then the zone, right? It's red. It was broken, so then it becomes support. Then you see that it's getting rejected, and then you can buy from these levels. Or you can look at it from this point. Whoops. See this SNR level, price has broken above. I'm just showing you guys the other way to view it, but it's like a resistance level. Price broke above it, and then it went bullish. It gave us a sign, and we just this is the basic view, but I don't use it that way. I'm just hoping so then you guys understand what I mean by this right here. It's the same way, right? You're expecting the reaction to come from this level, to come to this level, right? Because it's the line chart. That's what everyone wants. But no, it comes to the decision level right here. And I used to trade this way. I would mark the daily, I would mark the line chart, but from observing price and everything, it's coming to the line chart, but inside the line chart there's a candles, and the candles have the decision level. So you have something like this as well inside, right? The line chart, this is like a shoulder level or something. You can say if you use line chart, people will also use this level or this level, shoulder level. That's Quasimodo, or you know, uh, the apex, or the shoulder. That's what people teach. I don't teach those names anymore. I just teach decision levels, and sometimes they happen to line up with those patterns, and yeah, I don't want to talk about that, but anyways, you have those rejections happening. Is there any questions? I know I'm like ranting and going off, but what's up? Is there anything that I can answer for you?
Um, I'm pretty solid so far.
Good, great.
It's like we're in the middle of a blizzard now, so I had to switch to my
Me
phone,
too,
but I've
bro.
just been watching on my phone.
Yo, this is our
So
first rainfall, bro.
yeah, you got
Yeah,
some?
yeah, we
Yeah,
finally
dude,
got some snow.
it's snowing like a bitch right now up here in New Hampshire.
It's freezing cold out here, bro. It's
Yeah.
it's
Oh my
cold,
God.
cold.
Terrible.
This is
Um,
stuff. This is stuff making sense. Like I mean,
it is making sense. I definitely think I need to go
did I
back
bring
through it
it?
on my own and watch the recording a few times this week because I'll have the time and I'll just
kind of put my charts side by side and just go over it. Like I'll pause and go over it with the recording just on the multi time frame stuff. It is making sense. So essentially it's just a breakdown of finding the DLs on the weekly down to daily, finding why it broke structure, and then we can go down all the way to the 1 hour to figure out the most probable area to take a trade from.
Yes.
So,
I
yeah.
know it's a little bit noisy. I know it's a lot
Yeah.
to take in. I
Yeah.
know it's not probably something that you're used to looking at, but I think if you can just put it in your own words,
Yeah.
what I'm showing, even if, yo, bro, like, uh, how to say it, because anyone can look at what I'm showing you guys and say, if they don't trade this system, they'll just look
Yeah.
at it as a bunch of talk, right?
Hmm.
But showing you guys this and I'm looking at the stuff like this, um, it's just printed data, and
Yeah.
it's easy for me to look at it this way. I'm trying to make it easy for you guys, and if it's break of structure, smart money, or something that's easier for you to look at it that way, if you resonate towards things in that realm, maybe you use it that way. But I hope to bring light into this view of support and resistance, so then you could, take these types of entries here. Like, 'cause I know for a fact that you guys will look at these types of candles, and then wonder how people just get those quick break and retests, and that being the play of the day. You know what I mean?
Yeah.
Um, or I know when you just yourself look at the charts and you're looking at multiple time frame, you're probably getting lost with all the levels and the noise that's happening, right? I'm sure
Yeah.
it's easy to get lost with all the stuff going on.
Right. Right.
And it would be nice for us to be able to just look at the chart and find one or two levels like this and trade from, which we can. I mean, I
Yeah.
do this, but to simplify, the idea is to get our direction, right? So I'm using this example because it's a perfect example to give us direction. When I drop down to the lower time frame, I will see that something was caused this breakout, right? So I'm gonna monitor levels or zones or things that cause the breakout on the time frame below. So I've seen that H4 caused this breakout below this decision level. I can see that from here. There's two things. We have this open and close. It closed above this daily. What closed it? This gap level. And then you can see on the left, we have the breakout. We also have a decision level being broken out. So that gives us an idea that price wants to go bullish. And we can confirm that on the lower time frame. I'm not going to go there just yet, but we can see that. All right, yeah, okay, fine. Price did break above the H4 and the daily upon creating this level. What we will say is that now I will monitor the source and the breakout level, which I showed you on the example like this or like this. You can monitor examples, right? This is rejected level. And then we're gonna look for another rejection at that level. And then we're gonna take our position above. Being that we had the breakout of the daily. So let's go back into price real quick. I'm gonna end this session. I don't want to keep it too long. I just wanted to scratch
Okay.
the surface for multiple time frame and just tickle your brain a little bit.
Mm,
Today was kind of just like um a overview of kind of how we look at a multi-time frame. But
yeah.
it's just not complete yet because you're gonna have questions of how to look at the charts and how to really do it, right? You have this decision level here after creating this all-time high.
Yeah, that is the all-time high, isn't it, for close? Wow.
Yeah. Yep,
What, that 2 weeks ago? Not even?
yep, yep.
Yeah. Damn, dude.
So we had this breakout. What we know is that whenever there's a breakout, there is going to be a retracement,
Pull
right?
back,
So
yeah.
we have this, price closed below, even such, closed below this level, and then it retested. But you can see this is the decision level here. But yeah, price made a decision, made an engulfing level, type 1, to close below this gap level, right? That caused this breakout. So if you're bullish, this level here should have held, right? Because it broke above.
Yeah.
It broke above. So like you're looking at this gap level when price is coming down, and you're looking at whether or not it gets broken through or respected one time frame below. So on H4, you're gonna look for sign of continuation to the downside on a lower time frame of this daily level. So if we go to H4,
Oh, oops.
no, my
Sorry.
bad. I'll go back to what you were
No, you're good.
marking. You were
I was
marking,
just, yeah, I was marking, just from this break of structure there with the close. You could have said that that would have been an area you might have seen a reaction from, and it did give us, um, a reaction there that I noticed. And then, I mean, honestly, on the first one, we had, like, I
yeah,
know it's in hindsight, but looking at that, like, that's still a
all good.
rejection. And you still, like, there's still a lot of money to be made or a trade to be won, at least in that situation. So I just want to point
Dude,
that out.
that's tremendous.
Thank you.
It's terrific. It's
Thank
good
you.
observation. You see these daily levels as well, right? It's
Yeah.
great.
Well, I just that's how I've been going about it.
And
Looking
you
at
should.
it, I guess in my own back testing, which mainly has been on the hourly, but it still really works very well. I've noticed that
At closing times, right?
looking for those DLs that have caused a break of structure in your direction, in this case bullish, is where you're gonna find most of the reactions. Now I did put my PDF in there with about 20 of them. Not all of them, like just based straight off of like I don't even know what risk management system you'd be using, like let's say 20 pips, 20 pips. Um, there's a few losses in there, obviously, but I noticed a lot of the time you get a pretty good reaction, enough to actually win the trade from the eye test. Um, and yeah, I mean
And that's specifically just using one time frame alone, right?
that's one time frame and just based off decision levels, not multi time frame, not
Yeah.
actual entries with the trend lines.
Yeah.
But I think I personally, just from the last couple of weeks of looking at it, it seems as if DLs could suffice uh adequately enough for an entry on its own, not even using a trend line.
Yeah. Yeah. Yeah, like trend lines. Yeah, exactly.
Trend lines are like, I feel like trend lines, at least at this point, just from seeing this, are
For
just
a
a
long
helpful
time.
complement.
I know how long you've been looking at them for.
Yeah. Well, like I'm looking at this, and I can't tell for certain, but that would have been like an even more of a reason to like look at this decision level and be like, oh, look, it adds up. Boom, boom. We have two. You know what I mean?
And that's like completely subjective to anyone, right?
Right.
So
Yeah.
it's like now we focus more on the levels. The
Yeah.
trend line gives you more of a visual feeling.
Yeah.
Sometimes we need mentally like a thing like that helps us decide
Yeah.
whether or not. But we, in the end
Mm-hmm.
of the day, we don't need it, but we do need it sometimes
Mm-hmm.
to just feel like it, that we're on the
Dude,
right
it
side.
helps. It never hurts.
It's
That's
like
for sure.
it's it's like that same thing about the muscle that I mentioned, right? You have
Yeah.
80-90% of it done, and like sometimes you need a confluence like that to give you that 10% boost, and it sometimes the trend lines can offer that
Right.
like difference, and to limit how, because you can abuse trend lines to limit how much you use them and stuff. You only use them whenever it makes sense to use them,
Yeah.
meaning which you're only using them when it comes to the trend, entry time. And if you see like one of the five that we use and it's
Yeah.
running concurrent with whatever we're looking at, then we can take it. But
Yeah.
the levels that you're marking are going to be the definite printing, like that, you know what I mean? That's like those are more definitive, defined, and more um, set in place that you can start to
Yeah.
monitor for like
Well, I'm actually looking at this now, and I'm really I don't know. You could have said like even on the initial break of this, the like you said, like the quick retest stuff that's happening all the time on the gap levels. It actually, I can't tell. It looks like it almost touched right there. I mean, this is also the daily level. I'm curious if there was anything to get into that. There definitely was on the lower time frame, just by um yeah.
there
I mean,
is.
right there, I can match that up. Yeah, exactly with that level, and then it's like okay, then we can drop it down the H4. I think I'm starting to understand this even better.
When you look at that, you can see that you have that exactly. You have the breakout, and then you will just look for the break of a DL, and you see that this push up was very
Yeah,
momentous. Just this candle alone, along with just a break of this level here,
right.
we will look at this point in
It,
time and
it's funny how the other strategies could play in too, because you could see that as a rejection, absolutely, like without because that looks like a rejecting candle for sure.
this.
And it is, but I think that also plays into your point of having the fixed RR in this situation, looking for a reaction up rather than I mean, like, I
This
don't
is
know.
kind of like
We could go
this is kind
back
of
and
like
forth.
taking closing price to another level,
Yeah,
like
it
to a
is.
different level. You see
Yeah,
that
but
the closing price, even
yeah,
though it closed below this SNR level here,
right.
um, but it closed above the decision level, right? That took price down
Yeah,
for some
exactly.
time. At one point in time, price went down 200 pips from here.
Yep.
And then all of a sudden we see price breaking above that level after it's been rejected. That shows us sensitivity of this area. If price can break above this level that took price down for so long, then you can start to put the pieces together that, okay, this is a breakout to the upside, and then you'll tell yourself and mentally that any pushback down is counter trend, and you
Yeah.
want to look for the catalyst that took price above this level. And then you can see in real time when you're taking the trade, you're just observing things. You're not just immediately drawing conclusions. You're looking at it from an area that just now you have reference. Now you have areas that you can start to identify for some type of reaction sensitivity, right? Like just a movement. Like as long as you see it, right? I think the beginning steps are when you can identify it, and then when you see it happening, like it's not false anymore. I know you've been trading for almost 3 to 4 or 5 years. Once and
Yeah.
then you see things happening as you mark up and you see things working.
Yeah.
I want to let you know I've been holding this inside for a very long time, but I will let you know that from our past, you have studied almost every strategy nearly out there. So I know
Yeah.
because I've seen it.
Yeah.
Um, it's not strategy anymore for you. It's more psychological based, more
Right.
of the other esoteric stuff.
Yeah.
It's not uh technical analysis anymore because we can do technical analysis all we want, right? I can show you
Yeah.
examples after examples, and we can even get the same entries, which we have in the past many times. We have
For sure.
looked at the same trades. I have history and I have chat history of this.
Yeah.
I have text messages and of this,
Oh
and
yeah.
yeah, like we've caught the same trade. So, but the results have been different. Um,
Right.
and it's always yeah, and that's where you might be like feeling a little bit doubtful with anything when it comes to trading because it's like I'm putting so much time to understand a system or a strategy, and I understand it, but by the end, but I'm not being profitable. So what's
Right.
holding me back from cashing out? That happens to me. That happens to the best of us.
Yeah. Yeah.
For real, for real. But it's not about me showing you, but it's about you being able to do it yourself, you know?
Right.
It's that's what we're here
Exactly.
for. We're not here to sugarcoat anything. It's all about how we can get you back on your feet.
Why? That's
Trading,
why I signed up for this, bro. I was like, yeah, I saw your post on IG, and I was like, you know what? It's 2024. Just graduated college. I think it's time to step back into this with a different perspective. And just like not having school now, I can just focus in. So
yeah, I do. I'm like fucking stoked to hear it. I've been holding
yeah,
a lot. We haven't talked in a lot, and the group hasn't talked a lot, and whatever. Yeah, I'm stoked, and I'm back with you, bro. And I know
yeah,
you're back to learn. So, but yeah. Um,
for
long
sure.
story short, um, the point is, I just can't wait for you guys to do good. And
Same here.
yeah, I think we're gonna end class because I don't want to make it too overwhelming. I might giving you a lot of explanations. I think because we recorded this transcript of me talking, if you can watch the recording a few times,
Yeah,
um, maybe when we come back again, then you'll be able to get a feel for what we're looking at and
yeah.
get into more. I think from here on out, like I said, it's just looking at it, looking at looking at this stuff, getting a feel, looking at it again, and then understanding it, and then looking at it again and being able to replicate it by yourself, and then looking at it again and seeing it happening, and then building confidence from there. I think that's
Yeah,
how any system works, right? It's first seeing it, someone else do it, and then being able to see it for yourself, and then being able to execute on your end um with any strategy. That's what it is. And
it's gonna be different this go around because
I think
we're
so.
talking about the futures rather
Think so.
than. I mean, it doesn't look like the forex prop firms are really even an option anymore. Everyone's closing down.
Progressive,
So
bro. We're progressive. We're moving forward.
yeah, you have to. No choice in the U.S., dude. Really, like, and the spreads are better. I don't know. It
Yeah,
seems like the move. So,
no, futures prop firms are great. I like them. I
Yeah.
don't use I don't use offshore stuff shit no more. Which I can.
Dude, yeah, they
use it.
just took my whole Hanko trade account. I was like, okay,
Dude, me too. I've used
yeah,
it since the beginning, so you can
yeah,
imagine, right? It's shitty. It's
yeah,
shitty. Um,
yeah. But you know, uh, we're still here, so I'm excited. I haven't even told anyone from like the other group that I was doing this. I think I'm gonna keep it on the DL. So
yeah, yeah. I was able to get top step, another top step challenge because
nice.
there was like a very good deal on it.
Right, yeah. Dion was sending that the other
Yep,
day or whatever. Yeah.
yep.
Saw that. Yeah, I'm looking into that, but that's kind of the finish line. I mean, this is